The interview you're about to watch is sponsored by Rua Gold. Please do your own due diligence before making any investment decision. Hello, everybody, and welcome into Commodity Culture, where our goal is to make you a better investor in the commodities sector. Today is July 16th, 2026. Before we dive in, standard disclaimer, nothing here is investment advice. Do your own due diligence. My guest today is the CEO of Rua Gold, a company focused on maximizing the asset potential of their two highly prospective, high-grade gold projects in New Zealand. It's Robert Eckford. Great to have you back on the show.
Lovely to be here, Jesse. It's been a while.
It absolutely has. And here we are on another day with gold at sub $4,000. I would love to get your thoughts there. It's been a tough few months since the war in Iran kicked off for the gold price. Is this a buying opportunity in your view, or do you think we could see further downside up ahead?
Yeah, I mean it's super interesting. It's probably and you and I are probably younger in this generation than most gold bugs out there, but is I think the first time we've ever seen a sort of geopolitical conflict unwind and gold goes down. It's pretty unheard of, and so all the fundamentals, whether you look at the economic side of the world or whether you look at the geopolitical side of the world, all the fundamentals are still very strong for gold. Yeah, we've had a pullback, but we've also had an immense rise over the last couple of years of the gold price. I mean, I got into gold 12 years ago. I switched from copper to gold, and that was when gold was $1,000 an ounce, and here we are at 4,000. So, in answer to your question, I really do see this as a good buying opportunity. I've always said I see gold as the store of value, and I see it shouldn't be going up 30 to 50% year on year. It should be going up 10, 15%. It should be outpacing inflation is really the aim of it. So I think this pullback is really healthy. I'm not worried about 2000 gold. I think general trend will see the upward movement continue because all those fundamentals are there. And I mean, it's not just me talking. Anyone can go on my SETI filings and you'll see that I'm still buying gold equities, especially Rua Gold, as we see this pullback, because we're trading at some pretty good discount prices right now.
Absolutely. And some other people who aren't too concerned about the price of gold are central banks, because central bank gold buying continues to be a very steady tailwind behind the sector. A total purchase of around 244 tons in Q1 of this year. This outpaces Q4 of last year by 17% and Q1 of last year by 3%. Poland accumulates the most at 31 tons, followed by Uzbekistan, Kazakhstan, and China. What's your take on central banks continuing to buy big as the price drops?
Yeah, super interesting. And I think it's two things that you can sort of read into it around that. Is it's not just that they're buying gold in more quantities than ever before. It's also that they're moving away from the US dollar. So it's like for everything they buy, they have to drop something else off, and US dollar is the culprit there. And so it is a sentiment shift of all central banks moving away from the US dollar and moving into gold. And that speaks to, and Juster is someone that's talked about it for forever, the de-dollarization. And is it going to happen? Who knows? I mean, it's one of these things is too big to fail, but when it comes, it comes. And so I do think that move of central banks buying more gold and moving away from T-bills and things like that really sets the tone for a long-term trend. Central banks don't sort of flip from day to day of whether we're buying T-bills or gold. They've now got this mandate to buy gold, and that's not going to switch and move away anytime soon. And even more interesting, like the restrictions China's putting on most recently on allowing investors in China to use banks to buy or leverage themselves on gold. And it's all, you have two types of gold when you buy it. You have actual physical gold, or you have gold units, which are just imaginary gold that banks make up so an investor can play the gold market. And China are really clamping down on that nominal gold or that gold unit purchasing, because it was creating too much price volatility. And the Chinese central bank, being as clever as they are, they say, well, we don't want to buy it at 5,600. Let's stop all this leveraged trading of gold and let's just buy the physical. And they've restricted sort of the financial aspect of gold trading, which has helped them steadily accumulate more as the price drops. So yeah, I think as an investor, as someone that's in the gold space, I think all these things from a long-term fundamentals perspective all speak really well to a good gold bull market continuing for years to come.
Completely agreed. I should correct myself there because it's Q1 that these purchases happened. So January, February, March, before gold started to really take a hit, meaning they were accumulating these large volumes when it was close to all-time highs, perhaps even more indicative that they're just trying to get into a neutral asset without counterparty risk. And they see what's coming up ahead in regards to the gold market. Now, assuming that the Iran war ends up being a longer affair, perhaps measured even in years, which is honestly where I'm leaning at this moment. If there was a gun to my head, would you expect gold to rise considerably in such a scenario? You talked at the start of the show that, it's strange that gold isn't acting as that safe haven in this time of geopolitical uncertainty and rising global conflict. And especially when we consider how much debt the US government already has and how much more it would need to accumulate to keep this war going. What are your thoughts there?
Yeah, I mean, firstly, I completely agree with you. I think this Iran war has been won 6 times already in the first few months that it's been going on, and it's still ongoing. And uh, interestingly enough, and this is just my opinions, I don't think US has any incentive to stop the war. I mean, US is fairly oil sufficient, whether it coming from South America or from Canada, where I am, and so the oil shocks don't impact America as much as it impacts a place like China. And so if you've got a trade war between the US and China, and suddenly China are paying 3 times the oil price and the US are only paying 50% more, why stop the war? I mean, it gives them a natural advantage when they're in this trade war that they're in. So bringing that back to gold and what happens in the near term or as this war continues, uh, it does, and almost similar to the Ukraine-Russian war, everyone expected that to end much sooner, and it does continue. And as this geopolitical unrest continues, people get more and more risk averse. They're not going to buy a 10-year bond because they don't know where currency is going. And gold is the liquid, safe trade that will outpace inflation. And we have to think that if you're battling against inflation, war times create inflation. It creates demand, it creates government spend, it creates a rising price of goods. And one of the biggest costs of any input around the world is fuel. And so when fuel prices increase because the oil prices are escalated, you're going to see more inflation and you're going to see more people flocking to gold because interest rates aren't moving. They can't afford to raise interest rates. So they're not going to touch the interest rate side. Inflation is going to come, and the only way to beat inflation is by holding gold. So, yeah, again, it's one of these factors that's really important to make sure you've got gold in your portfolio because inflation's coming and inflation's already here. And you can go to, I've been to restaurants and restaurants are now adding a fuel levy because it costs money for them to get their goods in, for their food into their restaurant. And they're going to take advantage and pass that on to the customer. That's just the beginning. It's going to pass through the entire market and the inflation will hit and the gold price will rise as people flock to that inflationary safe haven.
Let's talk about the equities because the gold mining sector, of course, has been taking a hit in the aftermath of the war in the Middle East as well. The story's been kind of the same for a few years now. The miners barely outpacing the metal itself in a market where many investors expected mining stocks to provide that major leverage on the price of gold. Will this paradigm shift in your view? And what are the headwinds holding the miners back right now?
Yeah, I mean, I feel like the 2025 was the first time the mining equities really started bridging that gap between the actual metal price moving and the equities moving to catch up to it. It didn't quite get there. I think the earnings from sort of producers and you go all the way to the top, your Newmonts are trading at a 8 to 10 times multiple. I think after the pullback, it's probably closer to 6 or 7 times multiple. When you've got a 30-year mine life and you're trading at a 6-year multiple, like it just, the disconnect is there. That is only exemplified as you move down the value chain into developers, into explorers. And so, yeah, I think there is a disconnect. I mean, I'd love to see markets be efficient and it trade like it should with multiples of a 20-year mine life, having a 20-year multiple. But we can't expect that because there's a huge amount of risk in mining, whether it be commodity price risk of where we're going to sit in 20 years, or whether it be governmental risk if you've got a project in West Africa. And so this is where, when you look at equities, it's all apples and oranges and pears. You can't put them all into one bucket. I think in this type of world, when you see commodity prices running, and I had the benefit of working, I started my career in Australia, nice, safe jurisdiction, really well loved for mining. I moved over to the DRC, obviously a bit spicier, a lot more political uncertainty, geopolitical risk, and then spent the last 10 years through multiple countries in South America, and they all have varying levels of risk. And now with Rua Gold in New Zealand, back to that safe haven. And one thing I've learned through working in all these different jurisdictions is when commodity price runs, like gold going from 2,000 to 5,000, the first thing that the developing world governments do is they see these companies suddenly get valued more. They see them making more money. Let's increase taxes. Let's take more free carry ownership. Let's get a bigger piece of the pie because now you guys are making all this money. They're nowhere to be seen when the downturn hits and you're barely making a margin. But as soon as the good times come, they're here to take a bigger piece of the pie. And so this is where jurisdiction in this market is most important. So if you're looking at any equities, I'd encourage all your investors to make sure you're really comfortable with the jurisdiction, that they're not going to change the rules on you last minute, and that you're comfortable with sort of the next 5 to 10 years of political risk. Will the equities ever catch up? Will they bridge that gap between metal prices and equities? I don't think so. But to be honest, for me personally, I don't actually mind that, because one thing the space needs more of is M&A. And if your equity prices are valued at where there's no upside for an M&A partner to come in and create more value or unlock value, then you're not going to get as much M&A. And I'm always a huge advocate of consolidation in the sector. The big companies need to replace resources, and they do it much more efficiently through buying it rather than exploring it on their own. And so there's a natural ecosystem where us small guys, Rua Gold, we started at 50 million market cap 2 years ago, and we're sitting here at 150, and we're unlocking value and creating shareholder returns. But the other thing we're doing is we're creating an opportunity for a bigger guy one day to come in and say, oh, you guys have a beautiful deposit in Safehold, New Zealand, and we'll want to buy you. And there's still room in your NAV where we can pay a premium and put it all together, and it makes sense for all investors associated. So I like the disconnect in a sense that it just means the ecosystem is working, and there's still upside for things to move on. Sorry, a bit of a long-winded answer there, Jesse.
No, love to get as much info as possible, and that's a perfect segue into discussing Rua Gold. For those new to the story, give us an overview of the company, explain the long-term vision, and maybe give us some insight into the advantages of operating in New Zealand as a jurisdiction.
Yeah, I mean, 40,000 foot view. Rua Gold is today the leading gold explorer moving into the developer category. And so we started this company, and it was before I joined it. It started in 2019 with an investment banker named Tyron Breitenbach, who was with Cormark at the time. And he came across he's a geologist by trade, and he came across these beautiful high-grade veins in New Zealand that were very much untouched. And it was all had historical working on there. So, I mean, New Zealand got its independence back in the early sort of 1900s through its gold sector. It became independent from the British Empire because it had so much wealth, and it had this early gold rush. And so part of that was in Reefton, where our project is. 2 million ounces came out at 20 grams a ton gold, really high grades. And Tyron saw this opportunity. He partnered with Oliver Lennox King, our chairman, and they started this company privately, looking at New Zealand when no one was looking there. And the perfect time to find an opportunity is going where someone isn't looking. And New Zealand had been overlooked, especially with the permitting regime they did have. It was very akin to a place like BC. It was very akin to the normal complaints we see in the mining market, where it takes 10 years for something to move from discovery to production. And so they had that long vision. In 2023, I joined the company as a director as we were moving towards the listing. And it was on the back of the fact that the politics had completely reversed. Essentially, the population of New Zealand were in a technical recession. There wasn't enough jobs for the young people there. The average wage was sort of $40,000 a year in New Zealand, mostly reliant on tourism and agriculture. And essentially, all the Kiwis were going across the pond to Australia, earning 3 times that on an unskilled mining job in Australia that had a mining boom going on. So they saw this problem as a country, and the government changed with the population really wanting to boost its economic resilience. And so mining was one of those vehicles to do that. And the best thing that they could have done, and New Zealand's a small country, 5-6 million people. They don't have huge budgets where the US go and throw billions of dollars at mining projects. They did the right thing, which is not intervene and actually move out the way and say, how can we make this more efficient? And they created the fast track permitting regime. And the fast track permitting regime is probably a bad name for it. It should be called the one-stop shop, because it doesn't cut any corners. We still have to do all our environmental baseline assessments. We still do our community outreach. We still do all the checks and balances that you need to. But instead of a government having 4 or 5 different stage gates to get a mine permitted, they introduced legislation which puts all the different panels, all the different stakeholders onto one panel, and they have 6 months to make a decision. So you can now get a mine permitted in New Zealand in 6 months. And that's really where we ramped up our activity, and we got a lot of investor interest, because here we are in a bull market of gold. We've got this antimony as a critical metal byproduct, which is having its own separate ecosystem altogether. And now we're in a jurisdiction that says more mining, quicker mining, let's get going and get more jobs and more cash flow and more foreign investment. And so for the first time in my 20 plus year career, I've got all of the stars aligned where everyone wants you there, and you've got a good commodity cycle, and you've got all the factors working in your favor to move a mine from exploration to development. And that's what we're doing. So to go all the way back, and I'm waffling a bit here, but to go all the way back to your question, the long-term vision is this. We started Rua Gold, and we started drilling in earnest really in 2024. That was when we went public. We raised some money, and we got our drill program going. We took over this whole district called the Reefton Goldfield, and the Reefton Goldfield had past production, as I mentioned. 2 million ounces came out, around 20 grams a ton, all between 1900s and 1940. So it's never seen modern exploration. It's never seen modern mining. So there's a huge amount of gold left in the ground there. We've taken over 250,000 acres of property, of tenements, with 9 past producing mines on there. And with that sort of landholding, the job for our team, and keep in mind, we're not explorationists, we're company builders. We like building into production. So we're not here to drill it out for the next 5 years. We said, where's our most prospective starting point? And we've located that as Auld Creek. So 2025 was the drill year to focus on Auld Creek. We just drilled the first 200 meters down and the first 800 meters along surface, and we found an initial resource of 200,000 ounces AU equivalent. This is where our story gets funny and our long-term vision comes in, is we want to get cash flowing ASAP. We know we've got a big district scale play. We've got a whole gold camp of land on our hands. Let's not dilute ourselves over the next 5 years by continually raising capital. Let's get to cash flow. We've got 6-month permitting regime in place. Let's get going. And so we're going through that process now, where we're aiming to submit a mine permit by October. We want to be fully permitted and ready to build our mine by Q2 next year. And we want to be in production by mid-2028, cash flowing, making money with our starter mine, with the plan to expand that over the rest of the Reefton Goldfield. And that's really our long-term vision, is to create a multi-generational mine in that South Island of New Zealand, and we're well on the way to do that.
There's been a lot of news coming out of the company since we last spoke. Let's begin by going back to May 5th when Rua announced a positive PEA for your Auld Creek project. Walk us through those results. I know there was then some drill results, which we're going to talk to in just a moment, but let's just hone in on the PEA for now and how that went.
Yeah, so we're working at fairly breakneck speed right now. So we essentially put out our 43-101 in February, which showed our 200,000 ounces of indicated and inferred resources of around 4.5, 5 grams a ton material. That's an AU equivalent. So on an overall basis, we're talking about 130,000 ounces of gold and around 10,000 tons of antimony. That's just looking at the first 200 meters of depth. And in this district, some of these historic mines went down 400, 500, 600 meters. So we know it extends down deeper. And there's actually a neighbor of ours. So we control 95% of that Reefton Goldfield. The last 5% is held by this neighbor of ours called Endura Mining. They're an Aussie private company. They've actually raised 400 million Australian dollars, and they're going to be pouring gold in December this year. So they're ahead of us in that respect. But they've got a smaller land package and one historic mine that they went under, and they've got mineralization down to 1,500 meters. So all to say, we know these veins run deep. We know the gold continues on much deeper than the old timers were able to get to. And so the PEA for us was, here's one mine across 9 historic mines that we've got. Here's the first 200 meters of something we know this district carries on down to 1,500 meters on. And the PEA shows that even in that first 200 meters, it's already producing a positive NPV. It's already paying for the plant. And because it's high grade, because it's at surface, it's nice economic. It's 130 million US to build the plant and mine development and get to cash flow. So all very bite-sized for our company. I mean, I've never embarked in my career on a $1 billion build project, and I hope I never do. I love the small, nimble, high-grade, 300 million size capex. In this instance, 130 million is our starter mine. And that sees us in this PEA generate 50 million of MPV just in the first 200 meters. We then consecutively or concurrently with announcing that PEA, we also had kicked off a 20,000 meter drill program that already shows Auld Creek continues down to 500 meters. It extends another 400 meters on surface to 1,200 meters. So it's open to the north, it's open at depth. We're going to add more ounces, and all of those ounces are gravy because you've paid for your plant, you've already paid off the capex, you're now just adding MPV, and you can increase throughput or you can extend mine life. And we're designing the plant to have both those levers available to us, whatever makes sense at the time. So that was the real takeaway of the PEA is, and it sounds funny to say, but I'm not going to sit here on my soapbox and say that we're here to build a $50 million MPV project. That is just the starter mine. That is just getting us going to get us enabled to put a mine permit application in, knowing that there's a lot more gold in the ground. And I can't sit here from a 43-101 category and talk about how much gold there is in the ground, but I can arm wave as the sort of junior mining CEO and say, I think there's millions of ounces left in Reefton that are untouched and very much accessible to us.
Well, that moves us to June 18th when you reported strong drill results from Auld Creek. You touched on them there. You've also moved to advance a PFS for the project. What are the highlights of the drill results, and when can we expect the PFS to be finalized?
So yeah, the 20,000 meters of drilling was cut into 2 categories. Right now, we wanted to show the market, which is what this drilling results had done in June, that this Auld Creek starter mine, and keep in mind that this is one mine across a whole district of historic mines, but this one mine is already expanding. It already goes down to 500 meters. We know that there's more than that initial 200,000 ounces in there. But when you put your compliance hat on for a PFS, you now need to move that from an inferred category up to an indicated category. And what that means in practical terms is drill spacing from 50 meters apart to 25 meters apart for our project. And so the first 10,000 meters was building out that inferred category, building out and showing investors that there's more inferred resources there, that this does extend and it carries on. The second part of the drill program, and it's heavily ongoing now, is converting a lot of that inferred resource into indicated. And indicated resources are then able to go into a PFS, which is done at a higher confidence level of resource. And so we're getting tighter spacing. We're bringing a lot more ounces from inferred into indicated. And that means we'll be able to put it into our economic model for that PFS. And so the PFS is deeply ongoing now. We're sending all the metallurgical core out. I think we've taken close to a ton of drill core out of New Zealand and sent it off for metallurgical testing to make sure we have the right flow sheet. Keep in mind that this gold antimony style mineralization is very well understood. This is what Alkane's Costerfield mine has been mining for over 30 years. Its Southern Cross has the exact same mineralization. So we're not reinventing the wheel here. We're not using any new cutting edge technology. We're putting a pretty well understood plant in terms of how it operates into New Zealand. All to say that all the PFS work is ongoing. At the same time, and I'll be quite frank, this is where the risk of an investor lies, is that we're building a PFS and doing a mine plan and expanding the resource and doing permitting all concurrently. So the gray hairs will only be coming by the end of the year, even more and fulsome in my life, because it's a lot to do at the same time. But if we execute on it, which we're currently on track to do, by October 31, we'll be submitting our mine permit. By November, we'll be putting out the PFS. And if all things look good from an economic standpoint, if the gold price holds above 3,300, which is where we're doing our base case analysis on, then we're looking good to start building a mine in 2027. And that's breakneck speed for anyone in the business to go from a discovery in 2025 to building a mine in 2027. I think I could be sitting on a Hall of Fame of record mine building speed.
That's awesome. Now, cash, how much is all this going to cost? How much cash is on the balance sheet? How much runway is that going to give you for this highly ambitious plan ahead? And what are the plans to raise more capital as needed?
Yeah, we're really lucky to have strong institutional support at Rua Gold. Over 40% of our cap structure is held by institutions. And so that really sets us in a good stead to raise money. We raised money in January at $1.10. And we only just, with the terrible markets we're in right now, we're only just trading below that for the first time now. So all of our raises have been straight shares. So anyone buying now is going to get in cheaper than the institutions got in back in January. But we raised $33 million and it was really well supported. We went out for 25. The book got up to over 75 million and we took 33 of that. And so we've got a lot of institutional support. We've got groups that want to build bigger positions in Rua Gold. But that 33 million sees us from all the way from today or when we raised it back at the start of the year. It sees us executing that 20,000 meters of drilling, roughly around a $10 million cost. It sees us doing the PFS and the community studies and the community outreach, roughly a cost of around 13 million. And then we have another project up north that we'll be spending some money on as we run a drill program up there. But really, we'll be sitting by the end of the year, even Q1 next year, with continuing on our drilling. We'll continue after the 20,000 meters and we'll keep drilling aggressively because we want to move this project forward. And in Q1, we'll be sitting there with roughly 15 million Canadian in the bank. And at that point, we're going to have a vision to, are we going to have our permit by Q2? Are we going to be starting to build this in June, July of 2027, which is where the project financing decision comes in and how we project finance that. We're already talking with a number of metal traders. The antimony offtake provides an interesting strategic advantage. There are a lot of Western governments really looking to get their hands on a reliable, good supply of antimony right now. So prize number one would be sitting here in Q1 2027 and looking at an antimony offtake and a little bit of debt and a little bit of equity to raise the 130 million to build the Reefton project, subject to any changes that will come out of the PFS. Option two, and we'll talk about it when we touch on the North Island property, is maybe we sit there with our mine permit and we decide maybe we want to build out the resources a bit more, and we spend another year as an exploration company sitting there with a fully permitted mine, and we could raise 30 million bucks at the drop of a hat. Again, we only have ever done straight share raises. We do a single digit discount to where we trade it on the day, and it's always oversubscribed. So we're very lucky to have that support, to have the institutions that trust in us and believe in the story. And so where some companies are saying, oh, when's your cash burn and when are you running out of cash? Our investors aren't so worried about that, in the sense that you're never going to get stuck as a retail investor with some big full warrant financing where you're stuck holding the bag of this share, and you're stuck with warrant clippers selling down your stock.
Well, is there anything we haven't yet discussed? Anything you want to emphasize? There's the Hauraki Goldfield project you've also got. Maybe you could touch on that a little bit, or just any upcoming additional catalysts you think shareholders should be focused on. I'll end this by opening the floor to you.
Yeah, I think that probably is a good place to go. And the Hauraki is in the North Island of New Zealand. So Reefton, Goldfield, South Island, it's mining mecca, it's historical gold mining town. Hauraki is a bit of a different kettle of fish. You're an hour out of Auckland. And so you're a bit more sensitive to sort of the city folk that are generally sort of no mining in my backyard. But at the same time, you've got this tenement that's adjacent to Oceanic Gold's oldest open pit mine, the Waihi mine. And it's produced 10 million ounces. The whole town of Waihi is built around this open pit mine. So we're in this pocket of New Zealand, North Island, that generally speaking is where the city folk don't like to talk about mining. But you've got this whole mining town that's produced a huge amount of wealth. The second thing that Oceanic Gold have up there is called the North Waihi Project, or some people call it WKP or Wharekirauponga. That's 1.5 million ounces at 18 grams a ton, and that was just permitted in 114 days under the fast track process. So that's, again, the New Zealand government permitting a mine. It's an underground mine. It's a beautiful, light environmental footprint. It's really good for the New Zealand economy, and it got permitted in less than 6 months. So it's a really good news story. Where Rua comes into the story is just 3 kilometers north, and our tenements are actually adjacent to that WKP project, is Glamorgan. And Glamorgan is a tenement that we've controlled for the last couple of years. We actually picked it up off Oceanic Gold. They'd had to drop the land as they were applying for their WKP mining permit, and we managed to pick it up. And part of the insights, and one of our key guys on the ground is our COO, Simon Henderson. He cut his teeth on these epithermals. He worked on that open pit Waihi mine when it was still a hill. He was the senior resource geologist, delineated that mine, spent 14 years there. He then went out on his own because he's an explorationist. He's not a resource geologist by any means. And he started his own TSXV company called Glass Earth Minerals, and he found WKP. So we've got the same geologist that discovered the WKP anomaly, that found that deposit that's now becoming a mine. And when the property just 3 kilometers north came available, he said, hell yeah, let's get it. So we picked it up for $4,000. It's completely upside for shareholders. And we've spent the last 18 months doing surface work there. We've done all the sort of resistivity testing. We've done the mapping. We've done the soil and rock chip sampling. We're really at the point now where we understand what we've got from a surface anomaly perspective. And we're about in the next month to get drill permits there. And this is one the market, I think, has forgotten about, because the permitting for the drill permits has taken an extra 6 months than we anticipated. We had to do a lot more ecology studies than we originally anticipated, but they're all done now. And we're on track to be drilling here in H2. And this could be a complete game changer, because there's not many undrilled epithermals left in the world, let alone in the first world. And so there's beautiful epithermal deposits in Papua New Guinea, beautiful epithermal deposits up in Fiji, but none are quite as attractive as these New Zealand ones, because you're adjacent to operating mines that have done multi-million ounce deposits. And so we're going to be drilling here in H2. it could be a complete game changer for the company. And again, I'm not an explorationist. This is where Simon Henderson, our geologist on the ground, is really excited. All our value, I believe, can come from Reefton. We've got a backstop in valuation. We've got a path to production down there. We've got a resource that's building out. But this binary outcome of Glamorgan in the North Island is an absolute game changer, because if we hit what WKP hit, and their discovery hole was 49 meters of 20 grams a ton, if we hit something like that, then suddenly the whole focus needs to move up to Glamorgan. That's where all the value for investors will come from, and that's what we'll need to look at as a management team. And we'll have that in the second half of this year. So again, looking forward to what would potentially be our financing time in Q1, Q2 next year. We have to take into account what Glamorgan will look like at that stage, and that's really exciting.
Excellent. Well, I'm going to put a link in the description below to the Rua Gold website, as well as social media for people who want to follow along with the company. Robert, as always, thank you so much for coming on the show.
Thanks, Jesse. Love being here.
Commodity Culture is a series on commodities and natural resources. If you would like to see more, be sure to subscribe and hit the bell notification so you're always up to date with the latest episodes.